Let me pull up some charts. See what we're working with. Okay, cool. Yeah, I spilled my coffee all over my desk. That was 5 minutes of terror. Talking to yourself after, jeez. No, I spilled coffee on my desk, so I had to quickly take care of that before it got really sticky and like dried. So I had to be AFK for a few minutes. But we're back. I made a new coffee. Got a little bit of shit on my computer still. What a morning. Then we'll do some chart stuff in just 1 second. I'm gonna wait till 10 a.m. regardless today, guys, because I really do want some more information from this next 4 hour candle. I'm not interested in trading this current 4 hour candle, as we're kind of inside of a range, which I'll explain to you, which has a two-sided probability for me. And whenever it seems two-sided, I tend to just stay out of that. I want it to be very clear for one direction or the other. Okay, I'm gonna throw this up. We missed. I literally just made my coffee and just sit down, and I went to plug in my mic, like my higher quality mic, and I just knocked over the coffee all over my stuff. It was 5 seconds flat, just destroyed everything. Okay, let's see what we're looking at. Well, at the moment, right? Like I talked about in the pre-market analysis, right? We have SMT at the previous day low and the previous day high. So look at the daily kind of dynamics here for this candle, okay? We have an SMT at this previous day high, and we have an SMT at the range low. So if you were to define this as a range, which you can define this as a range, look, you can see the range high and the range low. We have SMTs on both sides of the range. Now when we zoom out, we actually have a higher time frame range as well. So you have this internal range, and then we have the range of this low to this high. We have not taken out any of the range low, like this internal range low here also. So for me, it's really mixed bag in here, what price wants to do. On YM specifically, I see like a lot of strength on the higher time frame closes. We're creating higher highs, and we're actually closing above daily, and like the volume balance here, the new week opening gap. We're forming SMT at the lows. All of that supports bullish price action on the YM, which also has a very, very clear failure swing pattern in the market, okay? Like, again, if I'm looking at a range, well, then this is a very, very nice pattern to trade into, as is this, right? And the strength here you can see is defined by the relatively small daily gap, the new week opening gap, and staying within it, right, as opposed to below it. And then, of course, the higher time frame divergence at the daily low, right? Now, to play devil's advocate for the other side of the range, we have done the exact same thing on the other side of the range that we've done on YM, on NASDAQ and ES, in generating low resistance liquidity. So we have a failure swing pattern on both sides of the market. So you can see this is 1, 2, 3, 4, right? And on YM, it's the same thing, right? 1, 2, 3, 4 failure swings. All of those combined to make this, low resistance on both sides of the market. So now we look at the more immediate structure, and the more immediate structure in the 4 hour gives us a sweep of the London lows, 6 p.m. Then we get a 1 hour displacement higher. Following this 1 hour displacement higher, we have a key institutional reference level. That level is going to be this fair value gap and this order block, right? Which you can see NASDAQ comes into pretty nicely here. And we have that low resistance liquidity signature here as well. So this is that low resistance liquidity signature here. Right. So to frame a reversal, what I need to see here is some sort of divergence at these lows, which we have right in here, right? So I can see that we come in and we deviate below this low right here. and then we form a lower low right here on the NASDAQ. So this right here is the range low that is swept. Okay. That is swept. And this is the lower low that is maintained. So you can see if we look at this as the short-term range, we have the SMT forming at the lows, right? We have this change in state of delivery right here on NASDAQ. And we have the change in state of delivery on YM right in here. Right? So this would be that change in state of delivery right here. Again, NASDAQ is showing the most strength right now at the moment. Again, I'm going to wait for 10 a.m. simply because the 4-hour candle direction here is uncertain for me. And this 1-hour candle does not support expansion. Why doesn't, if I want to trade a reversal candle, I don't want to see a large wick of that 9 a.m. candle. So generally speaking, that could be a reversal model right here on NASDAQ from that change in state of delivery. Now, what I'm seeing is that this candle only has 15 minutes left, so not a lot of time left to expand, but also it has a large opposing run on the hourly. If I look at the opening price of 9 a.m., it's right here, right? We've expanded in relation to the opening price quite a bit more than we've displaced higher. So this is looking more like a doji formation on the hourly, and YM still looks bearish, which is my strongest asset. So I would much prefer to see the strength realign on all the indices. We make a run higher, right? And I really prefer to be trading YM for strength. Right, so I'm going to be watching how we react to this small imbalance here on the ES. ES looks the most bullish actually at the moment, creating that fair value gap. But again, I'm going to wait for that new candle to open so that I can get some more context. Because trading this reversal is in my opinion, nothing more than just taking a patterned entry. Now, it could work, but it's just not something I'm interested in doing. Right. Again, if a major red flag for longs for me here is that the strongest asset is the weakest. The strongest higher time frame asset, which is YM, is by far the weakest in this range. And I get that they're correlated, but I'd much rather see some realignment amongst all three assets. I'm just going to quickly toggle on my broker, guys. It's not on. My Apex Tradeovate is not connecting. Anyone else having issues with their Apex accounts? Tradeovate accounts? Or is it just me? Might just be me. I'll restart my Ninja Trader. I'm just going to log into my broker. Yeah, I'll restart my broker. It's all good. Right, so now we have a new sweep of that low, which is expected. That's a pattern change in state of delivery, nothing more than that. Doesn't really interest me as much. Again, the order flow in here is nothing is really realigned for me. Really got to wait for 10 a.m. for more information. I think any trades that are taken in this range are just worse quality trades. Damn, my trade rate will not connect on Apex. It's unfortunate.
It's connected.
It's fine.
Yeah, I refreshed.
Yeah, my trade rate's not connecting, guys. That's kind of strange, but it is what it is. I wonder why that's happening. Let me try logging on to Tradeovate. Yeah, my Apex Tradeovate's not working. Yeah, that's very weird. My Apex Tradeovate won't even log in on Tradeovate. What the hell? Oh, there we go. Now it worked on my Ninja. That is so weird. I don't know what's going on. Okay, seems to be working. Hopefully. Broker issues. Trading View has also been problematic the past couple days. I don't know if you guys have noticed. I sent a tweet to one of the Trading View devs being like, yo, fix your shit. Because it has not looked good, right? Okay, let's see what's going on here. We have another SMT forming in this hourly candle. Again, this is my key level, this order block. Just move it out here. ES really does look the strongest at the moment. YM looks the weakest, which is not the best sign. Again, if this continues to trade like this, my immediate feedback would be it's just going to violate the SMT low, and then we might take out the range low. I'm not opposed to seeking this liquidity in here, like these lows. Right, and even seeing YM take out that SMT low. I just don't like how YM is the strongest asset that is now looking the weakest. Yeah, TradingView has been a problem for like a while, at least a month. So we can see we have like a 30-minute imbalance here that we're respecting really well. And 930 trades into this 15-minute key level. Now the thing is we don't have any great SMT up here. We have sweeping of the highs of all three of these assets. We do have YM not coming into this high right in here. Right. So there's a local divergence inside of there. And now we have this change in state of delivery. Now this truly is more of a continuation bearish pattern. All right. So what I'll probably look to do is frame 10 a.m. as a continuation lower, guys. You can see that we're not putting in a reversal from here, right? You can see that immediate reaction. How did I say that? This is definitely more of a bearish sequence of price in this imbalance. The reason why we can say it's bearish is because we're forming up close candles and we're closing through them, right? And the weakest asset actually is the YM, believe it or not. Right? So the relative strength here is rapidly shifted from the YM out of the YM into the other two indices. And we can clearly see that because you can see this 30-minute candle and 50-minute candle here is a down close candle while it's an up close candle on the ES NASDAQ. So again, I don't want to enter near the low of an expansion candle, right? That's the logic for not taking a trade here. But what I will want to do is position myself lower now at 10. Right? At least to these lows. Like these diverged lows in here. Again, simply because I'm not getting a reversal signature inside this gap. And then if that's the case, I want to look for continuation to the liquidity objective. So for me, YM is now the lagging asset playing catch up, which is why it's leading in weakness. This is why assets have correlation in the first place. If they were always going to be one is stronger than the other, they would not be correlated assets. That's not the definition of correlation. They need to be consistently switching strength and weakness. So I can see that in this case, the strongest asset has become the weakest, and that gives me truth that this is a correlated triad, right? Because it's now the weakest, and it can play catch up to these lows, right? And then the range low is here on all three indices. This is the range low, and this is the range extreme low. That's a daily swing. So here's our SMT function right in here, right? Inside of a 30-minute imbalance. And we also form that 15-minute candle. That's a closure, right? Sweep, close, SMT. Go down to a lower time frame. We're going to see this is what I call a two-stage SMT divergence, where we also sweep out that high on NASDAQ right here. Sweep, right? That candle's high. So this is a two-stage divergence in the indices like this. Really good to see that, right? That's your protected high now that has two-stage divergence. Now what I'm looking for is just a continuation signature. So I'm saying, where is 10 a.m. likely to form its wick? Well, if we're going to continue lower on the triad of assets we're looking at, then we need to see a point of interest to create the wick. I don't want to enter near the low of an expansion candle, so I'm going to wait for a meaningful level to be engaged. Realistically, I'll probably want to see some 15-minute inside bar and then a 50-minute C2, right? Something like that. This is a decent entry right in here, actually, right shortly after 9:30, because there's still a lot of time left in this expansion candle. Unfortunately, at this point, I'm not entirely convinced, right? Seeing strong 5-minute closures. But again, you can see that quickly turns into just a sweep and then a expansion, right? There was an opportunity to trade the 9 a.m. candle today. I just didn't act on that quick enough. YM for the best trade, yeah. Yeah, YM is definitely the best asset to trade here today. Lower. Coincidentally, like this is not what we expected coming into the session, but it's very clearly what's emerged. So what I want to do is see 10 a.m. open and trade back up into the range. Realistically, I'm looking at areas like this. The overlapping area of this fair value gap and these wicks is going to be a lower time frame unicorn. You'll be able to see it. It'll be a breaker and a fair value gap that overlaps right in there. The wick overlapping that fair value gap. That's a very interesting area for me to see if a wick can form at 10 a.m. I'm asking myself, where is a 10 a.m. wick likely to form? Well, in this case, there's not much of key level it can form at. On the NASDAQ and the ES, we have priced in an opposing candle. So on those two indices, I will expect us to come back into this opposing candle, right? And on the YM, that level, right, is going to be right here. You see where that opposing candle is, right? So what we want to frame is a open high low close of that 10 a.m. candle. And at the very least, trade a distribution to these lows, right? Because we have no significant SMT in here. And if we don't get realignment, then we just don't trade. Right? This is a fake or a false bull flag. right? So this is again, expansion into consolidation. But again, this here has SMT, so it can reverse. This reversal can be consolidation into expansion, right? But this induces retail traders into trading breakouts. And all we have to do is denote where that SMT forms. And again, we have relative equal highs here, but we do have SMT. And it's much more clear on a 30-minute chart inside that 4-hour gap where that SMT forms. Right. You can very clearly see the divergence above this consolidated high. Right. It's just relative equals that we put in up here, and then these two assets are obviously weaker on the higher time frame. So we're going to see if 10 a.m. opens and forms a wick higher. Again, I need to see a wick form higher at 10 to get involved in a distribution here. We have more information now for this 4-hour open, so we don't want to be impatient. That's the most important thing. We needed to see this 4-hour close like this to be offered the intel to trade lower in the range. It might seem like you're missing on a move, but you're really not because you needed this 4-hour to close like this. So 10 a.m. is opening. I need to see a wick formed on this 4-hour candle. Right, you can see we have a 4-hour change in the state of delivery right here. Right, on all three assets, on the weakest asset here, which is YM, and on NASDAQ. Right, so that's our 4-hour change in the state of delivery. Again, I want to frame a swing point inside of this key level, right? So that's my CISD right here. I can move it over there so you can see it. I want to frame a swing point inside of here. And where's that swing point going to form? Like we just discussed, it's going to be this order block. It's an even better if we leave the London lows, right, as a failure swing to this level, and we trade higher into the range, creating the wick of this 4-hour candle. I'm just going to be patient, guys. I need to see more, especially after the market condition of yesterday and how consolidated we got after expanding. I really need to see something more ideal in terms of retracement. FOMO here is very easy to have, especially after observing a large candle closure on the previous hour like this. This is a very inducing candle. We also did sweep out that swing point. Right, so that could lead to a local reaccumulation. Again, it's very tight in here with this SMT as well. We can't forget about it either. I mean, I'm not favoring a reversal from here. Don't get me wrong. This is a bearish 4-hour close. But even after just sweeping short-term liquidity like this, I'm very interested in potentially seeing. Right? We did sweep out the London lows. That same candle that we've marked out, we swept out on NASDAQ. I'm very interested to see if we can get some sort of reaccumulation function in the market. And what did I say the ideal swing formation will look like, guys? It'll be a 15-minute C2. So I'm more inclined to allow this 15-minute candle to form the opening price of the 10 a.m. candle to form a wick, which will look like this as a, if we look at candlesticks, think about what we're seeing here. This is what the higher time frame we want to see do on the 4 hour. Now break that 4 hour into some 15-minute candles, and I want to see this. Okay, open, right? Create a small wick, create a consolidated candle on the 15-minute chart. Okay, that's right here. That's the opening price. This high is going to be formed as a function of a candle 2, right? So we open and just draw a wick there. With the divergence in a key level, which is the L, which is right here. Then we can trade a continuation, which is going to be the body. So the wick is confirmed with a candle 2 or a short-term reversal. And then in addition to that, we also have an SMT potentially, and then a change in state on the lower time frame. So this is your 4 hour. This could be your 15. And then your 3 minute is going to show you an intra-candle change in state of delivery right here, where we have a consolidated candle 1, a run on the high, and candle 2 at the open. A change in the state of delivery, and then this part right here is going to align with right here. Right? That would be the 3 minute. That's how you want to see swings form. And a lot of people will be induced into this market lower prematurely, just anticipating like, it's bearish, small retracement, right? They'll find like a fair value gap, right? Or they'll use this order block and they'll just short the market, but you're not allowing the wick to form. So it's much less confirmed in structure, right? There's been almost no reaccumulation, right, after this move. So very basic premium and discount concept is also applicable here, right? This is where premium and discount matters. Because you have a new phase of price delivery, right? When market's expanding, you're not going to see me regularly or frequently use premium and discount. When market's not expanding, when it's in a new phase, retracement, reversal, I'm going to be looking at premium discount concept. Again, if we had strong closures, guys, above this high, I would tell you I would look for the exact opposite type of trade. If I had a strong closure above this high, I would look to long the market to the London highs. So we don't reverse here, right? We don't retrace here and get a lower time frame reversal. Now we have a SMT at the London lows. Remember, this is still a range. We have an SMT at the lows. We get a change in state here. I'm just going to be looking for a logic to get involved in the trade, right? And again, what's the asset I would take a long on? What's the better correlated asset? Well, it's going to be YM with strength, right? Again, diverging at these lows with the better draws. All right, we can see we have a 15-minute C2 potentially forming here. Change to state of delivery. So let's see if we can get follow through higher. That's why we stay fluid with our higher time frame bias and we stay mechanical with our lower time frame executions. Because you don't want to be the person who is offside in this range. Even this candle, a wrong short can be extremely punishing, right? 1% of the index, maybe it goes 100 points or so, 80 points, 90 points. You don't want to be offside in here. right? So 10 a.m.'s opening as a sweep as well, which is what we pointed out of the London lows. Closure through gives us a bearish soft bias. The invalidation of that is going to be if we close through this candle. And if we do close through that candle, I'll look for longs. But at the moment, still looking to frame continuations, right? I just read the chat. Is he coming back? Yes. I just dropped coffee all over myself. I started the stream and then literally as I started it, guys, I plugged in my mic and nuked my computer with coffee. Terrible timing. Yeah, I don't necessarily buy these shorts yet. I got to see a strong reaction out of here, guys. Again, being very, very intentional with my bias today, being discretionary, like being soft on my bias. I see a range, and when you see a range, you need to look for deviations of the extremes of the range. Range low, range high. We have SMT on both sides of the market. Okay. It's very interesting, actually. It's very interesting. I think maybe back to longs might be the look if we don't get reversal from here. Again, I want to see it in time too. I want to see 10 a.m. quickly form a reversal. I don't want to see 10 a.m. do this. Form a 50-minute close, right? And then the next 15-minute candle doesn't immediately take the high and go lower, right? We shall see. Here's the key level. Also, I'm looking at this, right? This. Low resistance liquidity run signature. Mm-hmm. Down here. Yep. And 4-hour SMT. That's a 4-hour swing point, right? Low, high, lower low, low, high, higher low. Yeah. Mixed bag. The ability to do nothing here is very very prudent, guys. Just wait for more information. Seven-hour C2 potentially forming as well. Again, 7-hour just shows us sessions. This is 1 a.m. to 8 a.m. Right? We didn't sweep out the absolute low. We just swept out the lower time frame low. It's a failure swing. That's why I'm mixed bag. These highs should be ran on NASDAQ. These highs should be ran before we go lower now. Inside the breaker. Oh, we have SMT. We shall see. Not bad. I see the SMT in here. Right, we're gonna see how the next 15-minute candle opens, right? Again, remember we talked about that 15-minute swing point formation? We want to see how the next 15-minute candle opens. This looks good for continuation lower. So this next 15-minute candle, right? We have this inversion for I guess we just print. I'm gonna probably look to short YM. If we can hold this inversion on the lower time frame, I'm gonna short YM. Break even down here. I'll let you know when I take a position. I need to see this 15-minute candle form the wick, right? I want to see this candle reject here. I want to see NASDAQ invert this gap as well, guys. Yeah, we have a Powell speaking at 1:30 today. I understand that as well. I want to see this change in state of delivery here on YM, and I also want to see this inversion be printed on NASDAQ as well. Because my range objective is lower than the London lows. I have a lot of meat on the bone. I have a lot of failure swings in here on both indices. And I also, of course, have that YM major swing that hasn't been diverged out yet. ES also gives me that inversion. ES looks the weakest here. Again, I'm going to short the weakest asset that I can find. I'm really just waiting for that change in state. And I just need 2R in the direction of my draw. I have failure swings on all sides of the market. Like on all three indexes, rather, I have failure swings. So I just need 2R in this direction. This direction. There's an inversion for a value gap and a balanced price range that we form here, right? NASDAQ is the strongest. Right, if I'm bearish, I do not want to see more than 50% of this candle retraced. That would be an invalidation of bearish order flow. See a strong run above 50%. This looks like it might form that C2 formation on the 15-minute chart, right? I'm keeping an eye on these 15-minute highs. Again, just got to be very patient in here. ES is my weakest asset, so I'm going to keep that 50% mark, see if we form some sort of divergence. At this point, to go higher, though, after this expansion into consolidation, I need to see another run on the lows. It'll be hard for me to trade long from here. This PA is hard. Yeah, very good observation. This is very hard price action to trade. And if you're not patient in this, then you get chopped. Some days you have to do a lot more technical analysis, right? And this is one of those days. Because you need to know exactly what you're looking for. And if you don't know exactly what you're looking for, you will get chopped. Certainly. This market is designed, like in price action like this, to be extremely unforgiving. Meaning your mechanical mistakes, right, and execution errors are more punishment. Yeah, I would need to see one more run for the lows because we've gone from expansion into consolidation. Expansion met with expansion is reversal. This is expansion met with consolidation. I need to see another AMD to reverse. Now, if we do this, that's just an invalidation of a trade idea for me to go long. Because we've met expansion here with consolidation, the reversal needed to be sharp and not give a phase of consolidation like this. When you see this into this, and then it can do that, and then it can do that. It just didn't give me strong closures back in the range. This inversion for value gap is no longer a point of interest for me. All right, I didn't get a realignment from it. Again, looking at this 15-minute chart, I have a small imbalance here on the YM. We have equal highs up here. Again, this is exactly the formation we would want to see for a continuation lower, right? We want to see a 15-minute C2 form inside this 10 a.m. 4-hour candle. But the problem is that there was also SMT at the lows. That's why in here I'm not taking any trades right now. Because I have to see more information. Right? Like if again, the invalidation of any shorts is if we come back above this high, I'm gonna go long. So if we come back above this high, I'm gonna take a long, right? This change in state of delivery qualifies longs. Now, I don't prefer to see that given the current price action and the consolidation phase here. But again, this is a strict invalidation of the sell side delivery, right? That's expansion into expansion higher with the change in state of delivery and SMT at the lows. But you got to be careful in here. You don't want to get chopped, right? In here, there's not opportunity. Bring out the 50-minute high again. There's that 50-minute order block, right? If we close through that 15-minute order block, like this chain to stay delivery here, qualifies longs. Right, look. We have SMT on both sides of the market. And it's going to qualify longs on the strongest asset, which is NASDAQ. It's looking good for some NASDAQ longs. Just targeting all of this liquidity in here. This is what I'm seeing as a low resistance signature. And of course, we have no divergence of the London highs. 15-minute chart removes the blur, right? So let's see how the 60-minute candle closes. Essentially, you're framing an order block or a breaker, right? When you remove the noise, yeah. There's an SMT at the 10 a.m. low on this triad as well. We don't need to look at RTY. 4-hour opens with a small wick forming SMT. Small wick forming SMT, that supports expansion. Again, if we don't get realignment lower, this supports expansion higher because it has the framework for divergence and then a 15-minute change in state of delivery, right? There's this SMT at the lows. Again, this 15-minute candle changes delivery state, and that's expansion with expansion. Yeah. In the lower time frame, we did see manipulation, but on the 50-minute, if we get a strong closure above here, it's expansion with expansion. But I agree. I'd prefer to see the lows run. I'm not gonna. I'll trade the structure in front of me. This is like the destroyer of accounts, believe it or not. Like just this range in here will do a lot of damage to accounts. Because people will take positions on both sides, and the market hasn't shown you which direction it wants to go yet. The 15-minute, yeah. Like that change in state. Believe it or not, the range here used to be the size of a daily candle. This range in here of like 200 points used to be the size of daily candles. That's why I'm very particular with the entries I take inside of these days. Like I need to see more confirmations and less usually. I would rather take an entry higher up or lower down in the range with more confirmation, especially these days. Because the invalidations can be struck so quickly with so much volatility. Right, so what I'm seeing here on the lower time frame to support a reversal is expansion into expansion, changes to delivery in here, right? Lower time frame, another phase of expansion, confirming potentially a new 50-minute change state delivery, right? So this is the lower time frame realigning with that higher time frame if we're bullish. Right? And the trade idea is something like this. That's a good trade for me. I'd risk just the 10 a.m. rejection block because the wick is so small. Right, so the next thing of interest for us is the closure of this 50-minute candle. Can we close through this high as well? Right? Are we going to get a closure through these highs? We'll have to see. If we get a closure through all the highs here, right? We don't really get a chain to stay delivery yet. Again, that 5-minute chain to stay delivery confirms the hourly reversal, as well as that's also paired with the 50-minute chain to stay delivery. That will be here. Right, this order block has a strict invalidation of above 50%. So you can see, use the entire order block, we're still respecting that 50% level. ES is respecting the order block as well. But again, this looks more bullish than bearish. Any concern with trading prior to Powell speaking at 1:30? I mean, here, any trade I take would probably be a positional trade. So I'll be looking for to cover a 4-hour low, for example. Well, here I may be covering a 4-hour low, this 4-hour low, right? So if anything, the news should distribute, or the volatility would distribute in relationship to that low that was formed, especially if you're trading alongside a positional entry. That's why you don't have to really be too scared of high impact news drivers if you're trading positionally. Now, if you're scalping, then of course, that short-term volatility is going to make a huge difference. It's probably going to run your stop. But right now I'm trading I'm framing a daily range trade, right? So this 50-minute candle closure here does not support a reversal, right? It's a closure through the high. Closure through the high. It does not support reversal. It supports continuation. With the draw being what? The previous 50-minute candle's high. Right, so this is our propulsion block now in the market that we have. Yeah, let's look for some frameworking for these longs. And we're now respecting down close candles that came into down close candles that came into a key level. It's also overlapping that 5-minute fair value gap, right? Like, I do want to see this liquidity taken up here. All this premium range liquidity in here. It's very relative equals. I'm trying to see if I want to get involved just a bit earlier. Maybe using this inversion. This inversion is part of that balanced price range. So if I entered on that closure, and I want to target at first just this premium range liquidity up here, I want to risk that for my break even. The first handle that fair value, yep, I would take that trade. So on NASDAQ, I'll take a trade that looks like this. If we get this 5-minute closure, I'll take a NASDAQ trade. Because again, I want to get a bit involved, a bit closer to my invalidation before that 15-minute SSD confirms, because I'm not seeing a reversal profile here. Yep, exactly. I'm framing a 10 a.m. reversal, choosing YM because of strength. That's exactly what we're doing, right? 4 hour opens in the context of a higher time frame sweep. Then we get a 1 hour T level to frame that 4 hour higher time frame sweep, the 1 hour SMT. Now 5-minute SSD is confirmed above this high, but then I get an invalidation of my 15-minute order block, a closure through the candle 1. So instead of seeing a reversal from the 15-minute order block, I'm seeing a closure. Then I'm seeing on the 3-minute chart respect of down close candles, right? Respect of this down close candle here. That would be the 15-minute or 30-minute to M3 continuation. Right here, right? Propulsion block, I'm seeing getting respected. So now I just use the intermediate time frame, the 5-minute, to bridge that and say, let me find that imbalance. I can get inverted to give me an early indication of a SSD. This is an early SSD. This is not SSD yet, it's early SSD. Now, the reason why I'm early in this SSD is because my target, right, risk adjusted, if I wait for the 15-minute closure, then the realignment will not give me a break even here. It'll give me a break even probably here. And I don't want that because the premium liquidity of the market is here. Look at the 30-minute chart and look at the 1 hour chart. That is the premium liquidity in the market right there. That's the break even. I don't want to hold for that high. So I have to use a risk structure here to improve my my multiple. I have to manipulate my risk and manipulate my entry, essentially, if that makes sense. We're just going down and saying, if we're going to get that 15-minute SSD right here to invalidate this leg, and we're also going to get that 5-minute SSD here to invalidate this leg, then we need to see some indication of the lower time frame realigning, which we do. Okay, so we take an entry on the lower time frame alignment. It doesn't mean that this entry is more risky. It just means it has less structure. So the less structure makes it more risky in terms of your market structure, but you get a better risk to reward. Whereas if I wait for the 15-minute SSD to close in the next 2.5 minutes, then I get a better structure entry, but I have to hold for a higher objective. So I've talked about this a lot. In trading, you're always weighing RR with the market structure. So you wait for more structure equals less RR. Less structure equals. Do pyramid? These days I don't pyramid because the risk of each trade is quite high because the range is quite large. No. Here. Right. So in a market with a less volatile range, I will absolutely consider a pyramid structure, but not in this market. No, I haven't pyramided in the past 2 months. It would just explode my risk, right? And it takes one candle to go 150 points to then blow your account. If you're adding into positions with market structure, and then you get candles like this, right? If you're taking a positional short, and then you add on this 15-minute change in state, if you're taking a positional short, right? That one candle just blew your or just at least stopped you out, but maybe even did some serious damage. That one candle on the 1-minute chart. When candles move like that, I can't pyramid because that's not even news. That's 4:27 a.m., right? You can't anticipate that. Okay, so we've confirmed that 15-minute change in the state of delivery right here. So now we're in this trade still, right? We'll break even when it comes into here. Other than that, nothing else to talk about. I almost never use minis ever. I will always prefer to scale out with micros and use an equivalent. The justification for using micros at the exclusion of minis is that I prefer the ability to scale into and out of positions more than I prefer the lower margin or lower commission. So the commissions associated with micros are slightly higher at the same position size, but then you get the flexibility to scale in and out. So I will almost always use micros. Yeah. I don't remember the last time I used like minis. So we're right back at our entry, right? We're retesting that 15-minute change in state. We'll see what happens. 429 or 729 we break even. 536 I take a stop loss. In between, I have no idea. Yeah, no worries, Sam. Yeah, Venturi, the risk structure is more appropriate from the early Sisti entry, yes. It's actually, if you think about it, it's almost identical to the risk structure I get from the 15-minute, but now I don't need to refine this 15-minute anymore. So I'm anticipating, Venturi, that a wick will form in this 15-minute opposing run. But the problem is if I need to now refine this wick formation, my entry is probably going to be here, and this opportunity is not risk calculated. I can't take the trade anymore. We're too high up in the range for where I want to take a position off. So I have to use a lower time frame risk framework. I have to, or else I won't be able to take the trade that I want to be involved in. Now I have to see that this Sisti holds, and I have to use, a confluence of technical analysis to show that. And if it doesn't hold, then the invalidation is quick and easy, right? I'm pretty close to my invalidation here. My entry, right, is enough room to breathe, but it's closer to my invalidation. You can see it's in this area here, and we're anticipating this 4-hour candle to expand. Right? From internal or external to external, it's a range. But we're taking our position off at that previous 4-hour candle high. We're taking a break even at that 4-hour candle high, right? That's the logic of it. I'd love to get your thoughts on trade management. Do you usually let trades run until at least 2 hour? Or do you take partials earlier? I will either take partials or break even my stop at an invalidation that could signal a reversal. So at any key level of liquidity, if it's above 1R, just above 1R usually, I'll break even my stops. Because if I'm positionally trading, so holding for a higher time frame range, then I have to use liquidity as area as a potential reversal. For me, like after we came into if we come into this high, it's a good break even for me. Then I can allow my trade to run to this external high if it's going to reach into there. Or for me in this case, just 2R, right? Which is pretty much this is devil's mark. Really, it's just this devil's mark in London, like right there. I can allow it to reprice that devil's mark risk-free. It doesn't have to reach into there, but if it does, that's a good positional trade for me. And if it doesn't, it just stops me at a break even. Just like yesterday on YM, right? We reached into an hourly level of liquidity. At that point in time, I'm break evening in the context that if it's a range, we're just going to revert the range and go lower. Right? Range low, we go higher. Range high, we go lower. Range high, we might go lower, right? So for me, I'm not framing the market to be moving like this right now. I'm framing the market to be moving like this. If you zoom out on all time frames, it's really what it's doing. Range, right? Range, here, here. And then that range is inside of this range. So it's just a range. We're just building ranges. Internal range of liquidities. So we shall see what happens, right? We have this order block now. This is where we want to see a swing form. It also depends on the time frame that you're trading Venturi, right? Like if you are scalping the market, you're going to want to be securing your position probably more aggressively than if you're day trading, because a range that develops over the span of a day is going to allow more phases of market delivery. Think of your scalp as trading the expansion phase of a price leg, but a day trade is going to involve expansions, retracements, accumulations, manipulations, expansions, right? It will involve all 4 phases of market delivery. So I prefer day trades, obviously, because I like having a wider stop and a higher TP. I like trading in a range, targeting like a greater piece of that range, as opposed to just targeting this. I'm not a scalper. Scalping for me has never been something that was very effective. I always had a lot more success trading like this. Right? Scalping always felt like it was a very, very difficult thing for me to do emotionally as well. I became quite impatient as a scalper. And that impatience really did a lot of damage to my mental and to my equity. So I was never a great scalper. Right. And when I backtest trading daily ranges. So my executions are always going to be similar to that, right? It's just following process. Some of the best traders I know personally as well really kind of changed my perspective about scalping. Again, I mentioned him yesterday, but he's a really good example. Jade Cap almost exclusively trades the 50-minute and 1 hour charts. So again, I've been following his journey a lot recently. He's the individual who made like a $2 million payout with Apex, but he only has a 35%. R is high, right? Above 2R usually, but he also adds to winners and he trades positionally, so he knows where he wants to see price go. And he'll take like an hourly entry. Like if he's short yesterday off the previous day's highs SMT, right? He'll take a trade that's positional. Like he'll enter at this 1 hour fair value gap, if there is one. Where is one? He likes fair value gaps. Maybe a 1 hour sweep of liquidity with SMT, or the 1 hour order block, or the inverse, and then he'll positionally add into the position until it's invalidated. But that requires holding for hours on trend days, right? For the entire day sometimes on a trend day, which is very tough for a lot of new traders. Right, we're having a new phase of pricing here, which is consolidation. We have failure swings if we look left. So if we go down to a lower time frame, we're going to see if we look left, we still have failure swings. This supports expansion. This is like a nice area for a swing to form. And if it doesn't, it doesn't, right? It's not up to us to say it will. Again, our job is to simply react and then enter with risk. Yeah. But like traders like that really drastically changed my perception of what win rate means, right? If win rate really is the most important thing, and I realize is win rate's not the most important thing. It never has been. It's glorified to have high win rate. It's much better to have great, impeccable risk management and then strong levels, which I always say, like a strong level is always gonna be better than a 90% win rate, right? Strong level, take the risk, and then whatever happens, happens. So you would say partials are useful for risk management and emotional control. Yeah, you don't want to over manage a trade with partials. But for me, I like the idea of using partials, especially if I have points of invalidation, to at least be able to take some profit on a day that's not giving me the conditions I need to see. Like yesterday, I didn't see the conditions of expansion after about 2 hours, so I would have been inclined to take a partial. But yesterday I just used a break even instead, right? So it just gives you a bit more flexibility to manage a trade. Yeah, and it allows you to hold runners, which I think is the most important thing. Like, yes, you can manage a trade to avoid over indexing into risk. You can also juice your reward a bit too, which is nice. There's many trades that I take that my partials end up doing like 4 to 6R, and those effectively change the risk to reward of your average winner when you have frequently partials running, right? I only usually leave 1 or 2 partials. I don't leave like If I have like 4 contracts, I might leave 1 as a runner, but that 1 runner often does, you know, several more Rs. Why do you think, other than you trading live being fully transparent? I don't really know who trades live every day or as frequently. I know Kane trades live on occasion. I don't know if T and AM trade live. I don't think so. I don't know. I actually don't know. Like, honestly, like, I have no idea. But whoever trades live has my respect. Like Tanya on YouTube. Right? Anyone who trades live has my respect. So we're coming into this order block. Again, we want to see a swing form, ideally above 50% of this order block, right? Market is just consolidating right now. Very similar to yesterday after our entry. So we'll see if swing forms in this order block, right? We have a nice entry. We have a nice level. We're pretty much near our entry price right now. What are we, 5 points away? 10 points away-ish? Yeah. Yeah, man. That's the whole point, right? Just consistency of approach, guys. You're here to learn that. You're here to learn a good system and a consistency of approach. If you've been in here long enough and you actually understand what our community does, you'll realize that we will have weeks where we just destroy the market. We'll have months where we destroy the market. We'll make 20R, right, in a month. We'll have months where we break even. We'll have months where we lose. We'll have days where we don't trade and we do trade. But the thing is, we have a consistency of approach, right? It makes trading more like a business. You treat it more like a job and a professional, and you just do the same thing every day. It's like, I always compare trading to like showing up to your 9 to 5 in a sense, except it's not 9 to 5. But you just show up. If your boss asks you to input the numbers into the spreadsheet, you just input the numbers into the spreadsheet. It's not an emotional decision, right? You just do it, and you do it every day, and eventually you get paid for doing it. It might not seem like you're doing much work, and it's like crazy and it's hard intensive and you're emotional, but it's just the same thing every day. Trading is like bagging groceries. Like, it's the same. Like, we have a consistency of approach that we do every single day, right? So here you can see the YM gaining strength, right, which is expected. The strength of the YM is anticipated based on the higher time frame, right? The lower time frame is showing now a rebalancing of the strength between these assets in the triad, right? This is why they're correlated assets, because strength shifts, or else they wouldn't be correlated. We're literally right at our entry price. Price is really not doing much right now, guys. There's not much TA for me to talk about, right? Talking about ETA here is largely irrelevant. Market's doing what market does. Again, imagine we just weren't in a position. Market's still going to be doing that, right? So we don't have to talk about it too much. I've been in Hydra's Discord for a month. Blood takes long and short at the same time. You would be so shocked how many people do this, by the way. I don't want to expose anyone, but you would be absolutely floored with the number of influencers I know who take positions on both sides of the market and then post the winners. I think it's absolutely disgusting. Just next time you see, like, I'm not gonna expose anyone, but when you see Twitter recaps, remember that those recaps are not showing you the account or the time that the trade was taken at, nor if those trades were taken exclusively of other trades. Remember, if you have just a recap and you didn't see a live like a live performance of that trade or execution, just, I know the industry. Trust me. There's a number of traders who use replay and then show you the winner. Oh my goodness. Yeah, it's disgusting, guys. I think there's so much toxicity of social media, and that's one of the worst parts. Now, replay trading is terrible, obviously, but there's also people who just take positions on demo, eval, or whatever accounts at the most like opportune times, and they're not actually trading that. Like they're not trading it. It's like the classic, like you see those TikTok reels of someone bottom ticking, and you're like, okay, man, there is no chance you're bottom ticking with a 3-point stop loss. If you are, you're on an eval or a demo account. Like, imagine if I just had a 4-hour wick up here, and I'm just bottom ticking this 4-hour wick. I'm just like, okay, guys, this is my trade. Like, that's when you should say, go fuck yourself, right? Like, if I'm actually showing you that I'm doing this, this is when you say, okay, all right, something's got to give, right? Something's not adding up. Drop the scammers? Nah, I don't do it. I'm no drama. I don't want to be messy, but yeah, the industry's disgusting in some ways. Like, I mean, it's social media. We all know it. Like, it just takes half a brain to know it. Actually, it doesn't take a lot of effort. This is really choppy. Mm. Again, I'm seeing YM index towards strength, which I like. I like a lot. Now, here's the thing: if we start to like fail to close above these highs on YM as well, if we don't start to expand probably in the next 30 minutes, I might just manually close out my position because I'm not seeing anything that's supporting expansion right now. I'm just seeing accumulation and I'm seeing local SMT. Um, right? We don't control the market condition we enter, but we can look and observe to see what it does after. I'm just gonna be paying attention to closes of these candles. Um, right now, it's just looking really ugly. Right, I can see us running short-term highs. That's what I don't like. Running short-term highs and then closing back is not a sign of strength for me. But we're literally right at my entry price. So again, if YM were to come into here as well, I'm going to break even on all cases. No matter where NASDAQ is, I'm going to break even, okay? That's the logic. Because I don't control how this market moves. Yeah, I'm seeing strength with YM though. This could stop me out. Again, if we fail to take out these highs and we close back in the range, nothing stopping this from reversing here. It's just this doesn't support expansion right now. This is just a choppy market. You can see our entry price is largely where price is accumulating to, like right in this inversion. No, 4-hour opens quick. That's the SMT that we're framing the low around. It's just YM is getting the rotational strength here. I like YM the most. I think I could get stopped out on NASDAQ, to be honest. Seeing NASDAQ refer back to being the weakest again from the strong. But we don't control that again. We don't determine if NASDAQ is going to be strong or weak. Yeah, I think if we close back through this fair value gap, I might just close out my Nasdaq position because it's not really expanding. I think I'll do that. I'll look at this 5-minute close, and if we close back through this inversion, I'll just take like a 0.3R loss, 0.2R loss. I'm just seeing YM with the rotational strength here, and I'd much rather, honestly, I might just switch to YM, because YM is my higher time frame strength as well. I think I'm gonna do that, guys. I'm gonna switch over to the YM. I'm gonna close out for like a 0.2R loss, just a really small loss, and I'm just gonna go on YM here. Okay, so I'm just gonna change the exact position. I'm gonna close out like at a what's the stop loss? I'm gonna close out at 20-point stop and just take YM right here. Okay, same exact logic. I'm gonna risk that low. I'm just gonna trade the rotational strength. YM was always my stronger asset. I like YM more. Okay, so a little bit of a game time decision. I just don't like how Nasdaq is now the by far again the weakest. This is just really choppy in here. YM looks to be strong. I'm gonna break even at these highs and I'll hold. And the indices are good to use as a triad as opposed to just using two indexes, right? So let me use that same logic on the ES, right? You can see that historically there is a higher correlation with the Nasdaq and the ES. And when there isn't, these are usually events that are extremely rare, and the like decoupling of markets happens on occasion. But typically speaking, the mean correlation is around 1, and it's true for YM as well. But you can see the deviation from the correlation is much higher on YM, which is why I typically use YM less as a correlated asset. But right now it's strong correlation, and YM is stronger. So that's your daily lesson on math. I'm sure they use probably just a linear regression of some sort. I'm not entirely sure. They might use like an R squared value. I'm not entirely sure what they use, but some sort of statistical correlation they use. And if it's closer to 1, that means they're more closely correlated. That's when I would consider using all 3 indexes in a triad as opposed to just ES and NASDAQ. Also, here, I don't really care about the correlation as much as I do the strength profile of the YM, which is why I've been trading YM. Irrespective of the correlation, if I just turn off all my lipstick, YM is stronger in the range. Very, very clearly stronger in the range. I'd prefer to be long on that asset. So let us see what is going to happen with the YM. Really choppy markets today, guys. Which is anticipated. We got Powell at 130, right? We have a nice 15-minute imbalance that we could be forming. We get another consolidation candle. But really choppy. This is, I don't know what that indicator is called. I think I just searched correlation. It's called the correlation coefficient. This is a technical indicator by TradingView. Yeah, I'm gonna keep my stop loss here, guys. If we want to come back into this low here, I'm just gonna be out. All right. Market's moving just really, really sideways. Just to 5 and a low. So if we come back into this 15-minute deep retracement candle, I think Nasdaq might go for the lows. Right. So could be a quick one after we got back in on YM. you can see we have a sweep of these hourly highs in here, right? So again, we come up above this hourly high. We have this low resistance signature on the indices, but we're closing back into the range. It just doesn't support expansion right now. I'm probably just gonna set and forget this one. Yeah. I'm probably just gonna like walk away, leave my limits, see what happens at the end of the day. I mean, at this point in time, there's no point in me watching this, guys. I really like the entry. I really like the draw. I liked it on Nasdaq and I like it on YM, so I'm just gonna live with the result of this one. You're -1 RR today. Yeah, this market is an accumulating market. I use half size on this trade as well, so I'll lose $184, right? Yeah, I'll lose about in total like 250 with the Nasdaq like 12 point whatever break even ish. Definitely sizing down, right? At this point, I have a personal vendetta against YM though. I need it to expand eventually. Gun to my head, YM rips previous week high before we go lower. I mean, the daily chart, the weekly chart. Yeah, gun to my head, we're ripping previous week high. Well, I have no idea. We'll see. Who knows? These weekly candles look so different. You can see the strength really is associated with the YM on this weekly candle. Right? Still holding that daily volume imbalance as well. All right, right back at our entry price still. Yeah, I'm gonna set and forget this, guys. I'm gonna go like do something else, go for a walk. I'll keep you posted. I'm gonna break even at this high and hold for London highs, okay? London highs is the failure swing high. The reason why I'm targeting London highs is just I want to target this high. It's a 4-hour high. You can see on my 4-hour chart. It's just equal highs on the 4-hour chart. Okay. So yeah, gonna set that forget, see what happens, and I'll keep you guys posted in my analysis channel what happens. All right, see you guys tomorrow. I think we have more news, so 9 o'clock we'll be here. All right, don't do anything stupid, guys. See you tomorrow. Peace.